Welcome. My name's Jack Colreevy, Associate Director for the Corporate Finance team at Barclay Pearce Capital. And today I'm hosting on behalf of the Australian Investment Summit, an organisation focused on facilitating capital access to global companies through various channels. Particularly, we are hosting an event in conjunction with the London Stock Exchange on July 10 in London. And joining me today is a representative from the London Stock Exchange, Thom Abbott. Welcome, Tom.
Hi, Jack. Great to be here. Thanks for having me.
Great that you could make it. Thanks for your time. Let's quickly start off with you. You're the head of Southeast Asia for primary markets for the LSE. Can you just explain what you do and what the LSE is as well?
Thanks, Jack. Yeah, of course. So that's right. I work for the LSE, the London Stock Exchange itself, predominantly speaking to companies, advisors, as well as their investors about what a listing in London might look like. Some people might think it's a bit strange that I'm sat here in Singapore and get to travel around the region, meeting companies in Australia, right up the way through to Korea, as well as here in Southeast Asia. But as an exchange, we have over 300 years of history, and a lot of that has been providing capital to companies internationally and for companies to raise capital to go international. We have around about 40% of the companies listed in London are actually international companies in nature. For Australia, that's just over 40 of those at the moment. Of the about 2,000 companies that we have in London are from Australia. So great opportunity to meet companies, and a big part of that is that we have to share our message wherever we go. And sometimes, it takes partnering with an organization such as yours, with BPC and AIS, to make sure that we can share that message and make sure that a lot of the information that's needed to be understood about a listing in London, it gets to the right people. And so we're really excited to partner with you guys for the AIS to help both the investors and the advisor community in London understand Australian businesses, but also Australian businesses understand what a listing in London might take.
Yeah, I'm very excited about the event, and I think there's a lot of value to companies and to investors who will attend. Over 2,000 companies and 40% are foreign global companies. That's a huge and diverse market. What do you think attracts so many different companies and investors to participate in the London Stock Exchange?
I think for the companies themselves, I think there is that strong investor base and willingness to look at international companies. I think even if you look at the FTSE 100, our largest 100 businesses, although a lot of them might have had their roots in the UK, if you look at their revenues, over 75% of it is coming from across the whole world and internationally. So we're a very international market in nature. You're right, it doesn't just reflect the companies, but also the investor base itself. Why is that? I think maybe in part due to time zone. As the market opens in London, there's still a few hours of the day left of the working day here in East Asia, where you get some of that flow, and you also see as the market's sort of getting to the close in the UK, the US market is just opening up. So I think London's strong position as a financial centre has always been in part opened by that, helped by that, and it's reflected in the numbers. If you look at the average, the average book of an IPO in London is made up of 30 to 40% of US investors, another 30 to 40% across Europe and the UK, and then a growing percentage actually since I joined the exchange. Of rest of world, which is East Asian, Middle Eastern, and Australian investors as well. So really global in nature, both in terms of the companies, but also those investors.
Yeah. From my perspective, we have a number of clients looking at listing on the LSE or looking at doing a dual listing. And from their perspective, they very much have a link to the region, whether they want to grow into those markets, whether they already have existing customers there. And from a mining perspective, it's really interesting because ASX is a very heavy mining focused exchange. So it seems like the best place to list a mining asset, particularly an Australian mine. But it can get quite crowded. And so we look at the LSE as a venue where you can attract a broader range of investors, but then also you're not sort of lumped in with 500 other companies looking to explore gold or looking to produce iron ore. So there's that sort of aspect from our perspective, but very much we tell our clients it's not for everyone, and we only really recommend it where it makes sense. But I think that's a good segue for ASX is very much seen as a mining exchange. NASDAQ is well known as being very a tech-focused exchange. Are there any particular sectors that the LSE is over-indexed on, or is it very much just a broad, diversified marketplace?
No, it's a good question. I think overall we're a pretty a broad, diversified market. There's definite strengths within the financial and banking sector. Mining and energy have also always done quite well. But actually, even if you look at our tech sector, we've had over 50 tech IPOs in the past 3 years. I think certain sectors that do quite well, where there's potentially more depth and a better understanding. We've seen a real resurgence in sustainability-focused companies, where just partly in thanks to things such as TCFD reporting and some of those sustainability requirements being really well understood amongst investors. If that's part of your story, I think it's something that can get a real following over here in London. But overall, a very much a diversified market with most sectors covered in some way or another.
I mean, we talked about diversity in terms of sectors, but there is also a broad range of market caps from multi-billion to single million. And the LSE isn't just sort of one market. So can you talk about the different segments of the LSE and their respective advantages for these companies?
Sure. So as you say, we've always been quite a broad church in terms of market cap spectrum. We've actually been looking to do more in the private company space as well, which we could talk about another day perhaps. But if you look at our two traditional main markets, we've got AIM, which is our growth market, which is typically for slightly smaller companies, as you say. It's even sometimes those single million digit valued companies. But also, it's a market with a slightly simpler set of rules, slightly easier to get listed and have those eligibility, and around certain corporate governance requirements. There's not a strict adherence to UK corporate governance code, but rather using the QCA, so easier to be a bit more nimble and a bit easier for companies to be able to get listed on AIM at a slightly smaller scale. But that's not to say that those companies can't then grow on that market. And we've seen companies scale up from being in the low tens of millions into the $500 billion, etc. The other market that we have is the main market, where we typically see companies at around the, not that it's only based on this, but around the £500 million market cap and above sort of range that start to consider that, mainly due to the ability to have index inclusion. And we're actually going through quite a few major changes to the rules for the main market to actually increase the flexibility there as well.
Yeah, look, let's move into that. So the LSE, in conjunction with the FCA, which is the financial regulator, recently reviewed regulations and listing rules and things of that sort of nature. So let's talk about some of these changes some of these proposed changes that are set to come in, and what are the benefits to the companies listed on the LSE?
Sure. As you say, we've been going through quite a long review process with not just the FCA, but a lot of stakeholders across the market, and an understanding of, in a world where there's questions about de-equitization and how public markets are doing, actually, how can we ensure that London and the UK remains competitive and we still remain the most international and one of the largest globally? How that's now coming to fruition is we're in quite an exciting period. First, I think we'll really see in summer 2024, so this year, we'll see the UK summer, that is, we'll see the new listing rules for our main market. So where we used to have a standard listing, which was based on old EU regulation, and a premium listing, which had a slightly higher level of disclosure than those EU-based rules, and super disclosure needed around certain aspects. We're actually going to a much simpler single segment for equity companies, which will, in effect, it'll be simpler, more flexible, and disclosure based. I think that's the sort of the key way of thinking about it. Where previously it was a bit more rule laden around things like related party transactions, the 3-year track record you used to have, and other requirements. This will be much more about disclosing to the market exactly where you're at and making it much easier to then get to market. And sort of the other big change is you'll need to be guided on the market by a sponsor, but the situations where you'll need that sponsor will be far fewer. And again, it'll be much simpler and easier to understand. One thing I think that's relevant potentially to some of your clients and in Australia is, alongside this single segment, is we'll have a new international secondary listing segment as well, which will be much more based upon home rules and more similar to the old standard, but much easier to actually be listed take a secondary listing in London, and much more straightforward to do.
Yeah, it sounds like a pretty major overhaul. Are other exchanges doing this, or are you guys at the forefront of this?
I think certainly in terms of developed markets, I think this is the greatest changes that you'll see happening currently. I'm sure there's other consultations and so on out there. But yeah, this really is the greatest change that we've seen in London for the past 30 to 40 years. And we hope that it'll put us slightly ahead of the curve again in terms of enabling companies to have that slightly greater flexibility and still benefit from what is still the leading market in Europe by some distance. The year to date, we're third in terms of equity capital raised globally, only behind the US and Indian exchanges. And then if you look at other aspects such as liquidity and so on, we're actually on a free float percentage more liquid than the US markets when you look at our major indices. And then again, valuation. Look, I've always, this is very much driven by companies themselves and their own growth profile. And there's a lot of research out there at the moment that shows that London has just as many companies trading at a premium than other markets. So I think, coupled with those facts and the strengths of London as it stands, alongside these new rules that will bring that greater flexibility and transparency, it's a really exciting moment.
Yeah, it sounds great. And I mean, the LSE, along with a lot of other international exchanges, have gone through a lot of sort of trials and tribulations particularly over the last few years. And it's important that regulators and marketplaces are acknowledging the issues, and they're taking positive steps to address them. And so what I see these changes being is making it more streamlined, quicker, and cheaper for companies to access the market and allow investors and companies to meet and to exchange capital. So it's really exciting. I think we'll wrap it up there. Thank you so much for your time, Thom. I'm really excited for the AIS event, July 10 in London. We'll be hosting it at the London Stock Exchange headquarters. So thank you so much for your time. To learn more about the AIS as a company or to attend as an investor, please click the link in the description.